Okay, question number 2. Question number 2 indicates, and I'll just move that over here so that you can hear me a little bit better. What are we looking for? You are the management accountant for, this is a cash budget and cash collections. Question, Lee Paris Limited designs and manufactures cakes. The budgeted committee of the company has provided the following data for the month of September and estimations for the month of October in 2017. And we've got actual results and estimated results for sales, inventory purchases and some operating expenses. They've also given us further information which says 25% of my sales are cash sales, 75% are collected as follows. So 60% in the month of sale and 40% in the month after sale. That's pretty good going. Inventory purchases are on credit and are paid in the month following the purchase. Okay. It is expected that the following monthly operating expenses will be incurred, and we've been giving a list of operating expenses. The firm expects to purchase a new vehicle in November at a cost of $50,000. A deposit of 20% will be paid to the dealer in October. The balance will be paid in November. The cash balance on the 1st of October is $9,000. So you are a management accountant for Lee Paris Proprietary Limited. Use the information above to prepare a schedule of receipts. So it's a schedule of receipts is what we're looking to do. And from debtors showing the collections just for the month of October. Well, that makes life a little bit easier, doesn't it? Okay. And then we're going to prepare a cash budget. So first things first, we want to prepare cash receipts. So we've got sales for September and October. Cash receipts schedule. Okay, and we've got now, first things first, we've got September and October. And we've got total sales. Now they say my total sales are 50,000 and 65,000. So we've got 50,000 and 65,000. Now it says that cash sales, 25% of my cash sales are cash sales. So I'm going to do cash here at 25%. So 25% times 50. No, hang on, where am I going? 50,000 times 0.25 equals 12,500. And then 65,000 times 0.25 equals 16,250. Now this becomes important because cash sales are still sales. They're part of the schedule of collections. So that leaves me with credit. Credit sales, which is 75%. So 12,500. That leaves me with 37,500. And this leaves me with 8,750. Hang on, I'll just do that. My brain's a bit slow this morning. That's okay. That's what we have calculators for. 16,250. 48,750. And then we've got September and October. So now what we're looking to do is we're looking to allocate these credit sales to the months of September and October. And it's saying that 60% of the sales are expected in the month of sale. So that'll leave me with 60% of this collected in September and 40% of that will be collected in October. So that means that these 48,000 will be 60% will be collected in in October, sorry. So that, you're putting these little tips there help me remember what I'm doing over here. So we've got the first amount here. Can you see that on screen okay? Which is 48, no, let's go. We've got 37,500 times 60% or 0.6 equals 22,500. 37,500 again times 0.4, which is this calculation I'm making here, equals 15,000. Okay, and then my next amount that I'm looking to do is 48,750 times 0.6 equals 29,250. 29,250. So let's add those up because we're looking for the month of October, so that's the total I really want. Plus 15,000 equals 44,250. And that's the collection of my credit sales. But I've also got this cash sale over here. This cash sale I can add to here, so that's my credit sales. And my cash sale in October, because that's what I'm trying to calculate, is 16,250, which when added together, plus 16,250, should give me 60,500 as my cash receipts for October, because we're only doing for the month of October. So that ticks off item A. Now it says then prepare a cash budget once again for the month of October. Well, we've already done the revenue side or the income side of things. Now we just need to make sure we get all our expenses correct. So let's have a go. Cash budget. $2,017. Now, I don't tell you that for no reason. It's because you get a mark. So I'm happy for you to maximise your results. And first things first, we've got cash sales. And my cash sales is 16,250. Collections from customers. Yep. Is 44,250, and that'll give me my total receipts. Which as we've calculated already, comes to 60,500. Less payments. And the first thing that we're looking to do is I'm going to move my way down my list. So I've already taken care of my sales item. The inventory purchases are on credit and are paid for in the month following sale. So we're going to be paying for September's inventory in October. So we'll have inventory purchases of, what was it? $18,000. $18,000. Then we've got operating expenses here of 3,600. Now, just because it tells me there's operating expenses of 3,600, it doesn't mention anything else down here. So my 3,600 might be a non-cash item. Or so, hang on, where's that 6,400? Nowhere. Okay, so that'd be non-cash. All right, so now I've got inventory, I've got my salaries. Salaries of 5,000. I got rent, so I'm just moving down my list of 4,000. Now depreciation as we should know is non-cash. So don't include depreciation in your cash budget because it's not part of it. We've got insurance for 1,200. Electricity of 800. And we've got marking. What's marking, I wonder? Maybe it's marketing. I think it's marketing. Of 2,500. All right, I wonder if there's any other cash outflows. The firm expects to purchase a new vehicle at 50,000. A deposit of 20% will be paid to the dealer in October. The balance will be paid in November. Okay, so there's a cash payment that I've got to look out. Vehicle deposit. And what have we got? 50,000 times 20% is $10,000. So I've got 50 times 20% equals 10,000. All right, is that all of them? I think so. Yep. So let's add those up. We got 18,000 plus 5,000 plus 4,000 plus 1,200 plus 800 plus 2,500 plus 10,000. 41,500. So that's my cash outflow. Now I'm just going to bracket that figure just to indicate that it's a cash outflow. So my net cash flow, which is the next thing I've got to include, is just my 60,000 here, less my 41,000 here. So let's deduct that. $19,000 even. And then my cash balance. Yeah, because we've decided it's a non-cash item. There's operating expenses here, but there's also operating expenses here. So I'm assuming that this, for the purposes of this question, that operating expense of 6,400 is not included, or else it would have been down here. Yeah, that's right. Yeah. So where do I get to? Cash balance at the 1st of the 10th was $9,000. So my closing cash was 28,000. And the last item we've got on our list, so I've prepared the cash budget. Explain what a variance is in relation to budgeting. Should businesses be concerned with negative variances, positive variances, or both? Explain your answer. Okay, so what's a variance? Variance is the difference between budget expectations and actual results. Okay, should they be a variance, both favourable and unfavourable variances? Variances should be investigated. Yeah, so that's it there. So, and 1, 2. So that's then your cash budget.